We're live.
Good morning to one and all present, and a very warm welcome to this insightful panel discussion organized by the Entrepreneurship Development Cell and Incubation Center of St. Xavier's College, Autonomous, Kolkata. We are honored, privileged, and filled with gratitude to host such a distinguished panel of venture capitalists whose expertise and vision have significantly shaped the entrepreneurial landscape. Their collective experience offers invaluable insights into the dynamics of startup funding and growth. Now, allow me to introduce our esteemed panelists for today. Our first panelist for the day is Mr. Anil Joshi, founder and managing partner at Unicorn India Ventures. With over 2 decades of experience, Mr. Joshi has been instrumental in nurturing early age startups, leading Unicorn India Ventures to build a diverse portfolio of nearly 45 plus companies. Next up, our second panelist is Mr. Kanwal Rekhi, co-founder and managing director at Inventus Capital Partners. A pioneer in Silicon Valley, Mr. Rekhi was the first Indo-American founder and CEO to take a venture-backed company public on Nasdaq. His leadership at Inventus Capital has been pivotal in mentoring and funding early-age technology startups. Moving on to our third panelist for today, Mr. Ninad Karpe, founder and partner at 100x VC. At 100x VC, Mr. Karpe focuses on investing in early age startups using iSafe notes, aiming to be the first institutional investor in a new generation of entrepreneurs. His extensive experience includes leadership roles in various industries, contributing to the growth and scale of numerous ventures. Next up is Mr. Sayan Ghosh, co founder of Ortella Global Capital. Passionate about building companies and assisting founders, Mr. Ghosh leads India's only fund that co builds companies, emphasizing a hands on approach to venture capital and startup development. Moderating today's discussion is Mrs. Snigdha Sengupta, Head of Content Strategy at Lightbox India Advisors. With over 20 years of experience in journalism and content strategy within India's venture capital and private equity markets, Mrs. Sengupta brings a wealth of knowledge in shaping narratives and facilitating engaging conversations. On behalf of the Entrepreneurship Development Cell and Incubation Center of St. Xavier's College, Autonomous, Kolkata, I extend heartfelt gratitude to our panelists and to all of you for joining us in this enlightening discussion. Without further ado, I now hand over the proceedings to our moderator, Mrs. Snigdha Sengupta. Thank you.
Thank you. Am I audible clearly to everybody?
Yeah.
All right.
Yes, ma'am.
Thank you, gentlemen, for joining the panel today. It's a pleasure to be here. And I'll just kick it off in the interest of time. I'll just kick it off with the first question that I actually shared with you earlier. And I'll go on a first name basis if nobody minds. Kanwal, I'd like to start with you. You have the unique perspective of having invested in Silicon Valley, in India, for many, many years, starting companies. What would you say has been venture capital's most unique contribution to the startup ecosystem in India? And is it somewhat similar or very different from how venture capital has shaped Silicon Valley?
Well, Silicon Valley, is unique. It is one of a type. We have venture capital funds of every size and every type here. And, it's almost 50-year-old industry here. And it's a lot more freewheeling, a lot more risk-taking, better deals, more complex deals, deep technology deals, India is still very immature environment in my perspective. Funds are smaller. Even the big funds are, we have deals here which are $500 million deals, $1 billion deals. I can't imagine that happening in India yet. Indian deals are still not into risky, deep technology area at all. I mean, I haven't seen any, technology coming out of India yet. China has done a lot more of them. So, but it has started. Indian industry is about 25-year-old. I remember the initial funds. I was part of the initial fund back in 2000 or so, and it started. It hasn't paid off big money yet. Has paid some money. Yeah, yeah. For a while, there was no payouts at all. So Indian environment is a little bit messy. The government has too many rules, too many regulations. I just would let you know there was a company I invested in way back when, had an exit in 2010. And last of the payout from the escrow that government forced us to have was paid this week, 15 years
Wow.
later.
Which one was
Yeah.
this?
Sierra Atlantic, it was
Sierra
acquired by
Atlantic,
Hitachi.
yes.
It was Hitachi in 2010. The 20% of the money was held, for escrow, because government thought we may owe taxes. Half of that was paid about 8-9 years ago, and last half was paid this week.
Interesting.
Another way to go.
Yeah.
So
All right. Thank you.
I think the Indians are smart people. They will get there, but the government is into everything. Too much interference.
I'm going to bring in Anil now. Hi, Anil. Good to see you. What's in your view, what would you say is the single most important contribution venture capital has made to the startup ecosystem in India?
See, as Mr. Kanwal has stated, we are still in infancy. In fact, Mr. Rekhi may not be aware, but there has been quite a few changes happening in social media about some remark by Honorable Minister. But I think the objective was to push Indian entrepreneur to look at deep tech more, start building product-led, businesses. Uh, I remember getting involved during the formation of the industry early 2000, and every single deal which was being looked at was from the perspective of consumer internet. And I think the biggest contribution what investors largely, I will say, I'll classify investors, not just VC, is actually uh, helping fueling ideas which otherwise would have got died even without getting CD light at the end of the day. Today we are classified third largest startup ecosystem in world. We may have our own views about the quality and quantity, but the fact is that we have started uh, building with some very innovative uh, you know ideas. I fully resonate with Mr. Rekhi, but I think what interesting changes I have seen in last couple of years is that we have started seeing sector specific funds getting germinated in India. And that is what is actually helping, more entrepreneurs to get in, because the first time entrepreneur may not have the flexibility as might they see in different part of the world. Getting access to capital in India, patient capital is still not there if you ask me. While we may be multi-billion-dollar industry, but it's still not there. The fact is that. But the good part is that with some government initiatives and this vertical specific funds, we have started seeing some development in space of semiconductor. Right. I'll be happy to see even some small chip getting built in India that probably would be the start and may lay a road 10 years down the line to see real development coming out of it. Right. We are seeing hell lot of development happening on space tech, and I'm very much confident that with this early stage capital available, and with frugal mindset, we will come out with some very interesting solutions. I'll not say products or technology, but there will be certainly interesting solution which probably will redefine the consumption, be it space or defense or semiconductor. So I think largely investors have played important role in germinating companies. I still remember the first deal what we did in 2006-7, the check was 35 lakhs. And to convert into dollars, and probably, you know, it may not, excite any investor in world, but that's how industry started. Today we
Yeah.
are seeing, the early stage deals getting, investors interest up to $5 million. I think we have come long way. So
Okay.
that's what are my views.
Okay. Shayan, you've seen the IFC, you've seen the world from the IFC lens as well. What's your view on this?
Thanks, Snigdha. I
Hi.
think many of the points have been covered by my esteemed fellow panelists already. So a couple of things, right? As Kanwal said already stated, we are pretty late in the game. We are nearly 40 years late in the venture ecosystem. Even today, and we are behind, way behind China as well. I mean, no point debating any of those things. In spite of that, I think fundamentally what the venture capital has done for this ecosystem is we have some of the most brilliant minds residing here. I mean, I'm leaving the ones who have left, but residing here in this country. Venture capital has actually enabled them to leave their jobs, have some cushion, and start taking the risk. We have enabled that over the last 20 years. Some successfully, some not so, most not so successfully, but we have enabled that culture that, okay, starting a company can be a profession. It's not just getting an engineering or a degree. That's not the end goal. That mindset we have been able to change that did not used to exist, let's say 10 years down the line. That is the most fundamental thing I will say. I mean, and that has, I mean, of course, not as high as China or US, but there is some silver lining to it that it might be a couple of percentage points to our overall GDP, but to date, the startup ecosystem contributes to some $50 billion in GDP. That's huge, humongous. I think even some of the founders pointed out after some of the comments that were made that millions of jobs are created in this space, which ideally wouldn't have existed without this. Having said that, I'll come to the IFC perspective. We have tried to seed funds. We have, I think on the venture side, we had deployed and continue to deploy some hundreds of millions of dollars every year to seed funds, to grow the funds, to create that ecosystem. We have consistently seen that the risk appetite across have been significantly lower, and that I think Kanwal mentioned the reason why it's a function of the maturity of the ecosystem also. So most probably will reach there. So part is the maturity of the ecosystem. Also, the second part is the overall infrastructure that is required around it. The research ecosystem, that mindset, and some of the other pieces, those are still missing. Some of the funds are trying to create that. Some of the ecosystem partners, some of the government programs are trying to create that. Even today, we are very high level in most of the things. They are great for marketing whatever we are doing, but not so much, I would say, that might actually create, let's say, something better than DeepSeek, most probably, if I have to give a direct comparison. So that's what we have been seeing. We have struggled finding companies which are, I would say, scaled up in the deep tech space that actually even has potential to make money at certain point. We have struggled with that continuously at IFC when we were there out of India. So it is a real struggle all across. It starts from the seed. Unless the enough seed funding is going in, enough deep tech startups are being created. If you're just talking about the deep tech, across other sectors, of course, there are too many options already.
Vinod.
Yeah,
Hello.
you're laughing.
Good morning.
Would love to hear your comments.
Yeah.
Good morning.
Good morning.
You put me last in a panel of illustrious people to speak on a topic which requires deep thought, but I will give 2 minutes only. Of course, Mr. Rekhi is, we all respect him. Anil is a good friend, so I never have any disagreement with him at all. I always admire what he says, and of course, Sayan as well. So I will give some perspective because I'm in a very early stage, space. Being late to a party is not necessarily bad. All your young audience will love this statement, and it applies even to the VC world, tech world. We have seen it happen in the mobile tech. We have leapfrogged UPI. We have leapfrogged. There are a number of places where India has been late to the party, and India has had an advantage being late to the party. So I do not see a disadvantage of India being late to the party in the VC world. What are the couple of things which are happening good? Number one, ideas are not dying. We have in one funded 180 startups with around 300 founders. I will give you real examples. There is one founder who's son of a bricklayer in the village. There are three founders or four founders of that who are farmers' sons, first-time entrepreneurs from the villages. Would they have got money 20 years back? Answer is no. That time, ideas were chasing today, capital is chasing ideas. So, firstly, ideas are not dying today. Number two, becoming a startup founder is becoming a career of choice for most lot of young girls and boys. I will give you exact, real life, real statistics. As a firm, we are 5 years old, not very old, but and we give the first check. This is not a commercial for 100x, but I'll tell you the statistics. We are getting 8 to 10,000 pitch decks every year. Where are they coming from? They are now coming more from tier 2, tier 3 cities. More girls are applying. So the momentum is there. And finally, the last thing I would say is today, if you have a great idea, you will get funded. This was never the case ever in India's history. You always required to give collateral, some guarantor. Nothing of that sort is required now. So capital is chasing ideas.
Great. That actually sets the context for the next question very nicely, which is that, venture capitalists in India, whether they've come from the valley or whether they've been the homegrown ones, have typically invested in the metros, have backed entrepreneurs from primarily the metros, but that is changing now. And we're seeing more and more very good world-class entrepreneurs, startups emerging out of what is now popularly known as Bharat. Okay, so I know that Ninad and Anil have been investing in that space for a while now. I mean, you're one of among the VCs that went early into smaller towns and cities. Shayan, my question is for this. I'd like you to come in first because you've launched your first fund, your first time fund manager. How are you looking at the whole opportunity in terms of do you see enough opportunity for a fund like yours from tier two, tier three? What are the sectors that look interesting? What are the kind of business models that you see?
Oh, of course, there is still scope. I think we are starving for capital, this country as a whole. Even today, I think the gap has been, I think, amplified over the last 3 years as well. Once the funding winter has started, since the funding winter has started, but coming to there is space for maybe another 1,000 funds in this country in the early stage space. And even if you do the math, and the funds, that is VC funding coming in as a percentage of GDP, we are far, far away from what, let's say, China or US is at. So definitely there is space for more funds, and I hope more comes in so that it actually strengthens the ecosystem, which is required. Now, even today, most of the funding is concentrated in the pockets, the 3-4 areas where 3-4 regions we all know. Even if I look at Calcutta, right, what percentage of the country's founders are coming from there and startups are getting funded. I'm not sure even today there are more than 2 or 3 AIF which is registered in the VC space out of Calcutta. The numbers would be hundreds out of Mumbai, Bangalore, Delhi, and other areas, right? So, and all of these regions are completely starving for capital. So there is definitely scope for many other fund managers and across the country. Also, at the same point in time, out of our fund, the investments we have made, I think all of the three companies, all of the founders of the three companies are based out of non-metros. In fact, one of them they are from Calcutta. One of the teams are from Calcutta itself.
Nice.
So, and I think that will be the same for some of the others on the panel as well. So there are some VCs who are chasing Ivy Leagues, and those set of founders, those set of startups will most probably be based in this three geographies versus some of us who are chasing some of the non-traditional kind of companies from these other parts of this country. That is happening. In terms of the sectors, I think it will be quite diverse. I'll be very honest. Whatever we are seeing across some of these, they might not be building foundational models, to be very honest, but they are building something which can create value. That's our whole, job to find them out, and our fiduciary responsibility to deliver returns after all. Irrespective of innovation or not, ultimately it's about returning capital to investors. That's the fundamental thing, and that we are seeing quite a bit. And these are across sectors. We are seeing across consumer. It's across the country. We are seeing, and you can look at Shark Tank and see that people are coming from all across the country. Across pockets like Jaipur, Chandigarh, Coimbatore, and others, we are seeing enterprise services, GCCs, and all other models coming out. There are some rural-specific solutions, commerce solutions that are coming out from across the country. So there are pockets of opportunity all across, I would say, and it's quite diverse, in my view.
Okay, great. Kanwal, I want to bring you in here actually. I mean, you've invested as much in India as you have in the US. What's your view on on VCs? On should VCs also be looking at tier two, tier three? Or should they be looking more at tier two, tier three rather than concentrating themselves in the metros?
So, so I have done more than 100 investments in India, and and I'm totally out of India right now because became very painful, very especially over the last 4 or 5 years. After they shut down the Mauritius route, it's very hard to have a large team in multiple cities, right? So, so funds will have to be local. There have to be a lot more funds. And in my estimation, India should be funding 100,000 startups a year, maybe. If a country of India's size, it should have maybe $100 billion a year of venture capital coming in, but it's impossible under the present rules. The government has decided to have this local India industry funds. So instead of encouraging the local industry, they have tried to shut down the foreign investments in India. It's been very, very hard to invest in India here, and it's not very competitive environment. Just to let you know, I just finished writing my book, and I talked about the entrepreneurial nation rather than entrepreneurial people. US is an entrepreneurial nation. We have entrepreneurs, we have venture capitalists, we have entrepreneurial customers who buy imperfect products long before they're ready. Apple's, Apple iPhone is an example. 2007 Apple iPhone was pretty, iPad. The entrepreneurial, employees, who give up their jobs and come and work, and most of all the entrepreneurial government. Indian government is not entrepreneurial. The US government is very entrepreneurial. Look at the 2SBS laws, qualified small business laws, no taxes on first $10 million of profits in a startup. Jobs that, basically, dispenses with almost all the requirements, that other companies have. The ARPA, DARPA funding, far out technologies. So, India needs to become an entrepreneurial nation. India's future has to be entrepreneurs. India's future has to be smart people, smartest people in the world. But the dumbest government in the world is the way I would put it. China is a lot more free wheeling that India is. The entrepreneurial environment has to be very freewheeling. Startups, terminations, companies not working, shut down. It's it's very, very hard to operate in India. Either two companies which are not working, I can should be able to put them together like that, like we do in the US. You can do that overnight in the US. SEBI has its own rules, Reserve Bank has its own rules, Ministry of Finance has its own rules, Ministry of Company Affairs has its rules, and they don't coordinate. They don't coordinate with each other. So you have this notion of second tier cities, third tier cities. Even the major metro startups, struggle to function well. And I mean, we have a company. Just to let you know, we have a company. Delaware Incorporated, wholly owned subsidiary in India. All the employees, including the management, are in India. Delaware Corporation is paper corporation, so we can take the tax benefits. Government really makes it impossible. We have revenues in India we cannot use to support our employees in India. You have to spend money from here. Revenues in India has to be sent back to US. Nonsense, total nonsense, right? Why is this environment has to be as freewheeling as wild west as possible. That's what it takes to and we can do just something. We have few startups in certain third tier cities. We have farmers, bricklayers, but they are meaningless. You need to have hundreds of thousands of entrepreneurs all over India, and hundreds of billions of VC money flowing in. India should be attracting almost all the savings in the world for startups, but it is not. Because of the rules and regulations. So
Okay.
in spite of all that, India is letting it happen, right?
Yeah, it is. Yes.
It will really do well, if it starts to become a little bit more trusting of people, trusting of entrepreneurs. There's a presumption that everybody just cheat, especially the investors. There's a presumption of that.
I think a little more institutional support would help the ecosystem go a long way. I think much faster.
I will go the other way. I think the government should get the hell out of the system, let it function. A 160-page definition of a startup under the Startup India policy. I read a 160-page definition of what a startup is, what government thinks is a startup. Certification required by a government-approved some entity, for you to be a startup. And nonsense, total nonsense, right?
Right. Ninad, what's been your experience, really? I mean, these are all very valid sort of points that Kanwal makes, and we all know that it is difficult to build a business in India, especially for a startup. What has been your experience investing in, startups both in large cities and smaller cities across the board?
So my view is, this conversation about smaller versus larger cities is no longer relevant because it's very fluid. We get the number of pitch decks we are getting from smaller city people is on the rise. And even if it's from a large city, the founders are from smaller cities. It's not as if they're native to those cities. So even let's say I get from Bangalore or Bombay, 80% of them are not natives of those cities. So, it's all become fluid. So as I said, geography is history now. So there is a lot more hunger there, and there's a lot more desire to succeed. So we will see a rise of founders from all this, if not already. If you take the top 100 successful founders, 80% maybe in large cities, but they have migrated from smaller cities. So,
Myself, I am from a small city, India.
correct.
I didn't go to English medium school. I went to a Hindi medium school. Yeah,
Great example. Great
yeah,
example,
yeah,
Mr.
yeah,
Rekhi.
yeah. When I write my, when you'll see my book, which will come out this year. Yeah, I got into IIT. Yeah, even though I didn't speak any English. Yeah,
Great.
I was able to read and write English. And when I came to US, I barely spoke English. Yeah. So, so I think Indians are smart in small cities. Most of India lives in small cities and villages anyway, right?
Yeah.
So, so people, getting into IITs and IIMs from smaller cities. So I think that point is more, the point I was trying to make was India should be producing hundreds of thousands of entrepreneurs per year. A population of 1.5 billion people. And, the, its future has to be, it can be have 10 million entrepreneurs by 2047. We have maybe 100,000 entrepreneurs in India right now, maybe 150. I think number is something like that, right? Yeah,
Yeah.
it should be a couple of hours of altitude higher than that. It's hard because the capital is limited. Capital is tightly controlled by the government. Somehow, all sorts of rules. This money is separate from that money is separate. Money is fungible. It should be flowing into India. Whether it's it is. I'm telling you, the rules are very painful, especially for investors sitting in Silicon Valley like me. I scratch my head and why is this rule? Yeah, just to let you know, I sent a money to a startup, small amount of money, $10,000. It took me 4 or 5 months to get approval from, some code had to be given. What is this, development this company is doing? There were like 230 or so development codes. I had to pick one. I don't know which one to pick. Why is it necessary? I want to give this entrepreneur $10,000, because to play with his idea, and it wasn't. It was very painful, very painful.
Right.
So,
Yeah,
just a quick one.
yeah.
Regulations are in progress. Things are better than, let's say, 3 years back. And I'm sure it will keep improving.
No. It's going the other way. It is going the other way. Absolutely going the other way. The environment was much better 15, 20 years ago. Environment has done backwards last 3, 4, 5 years, especially very backwards.
Anil, do you agree with that?
Foreign
See,
investors. Foreign investors.
so that we will have diverse view. Ours is a fully domestic capital, right? So
I just want foreign investors.
our challenges are different than what probably Mr. Kanwal would have. But incidentally, we also have a feeder fund, and then we have reasonable amount of investors from US and other part of the world. But then since it's a feeder fund, I think we are still able to manage. But yes, we do have challenges. There are some regulatory bottlenecks. I agree on one front that there are at least three, four institutional hazard. If I can say that RBI have its own guideline for managing forex, and then SEBI has its own guideline for managing funds, and then we have ROC or Ministry of Commerce, which basically governs the formation and administration of company, and then there may be some other industrial rules and regulations. So yeah, we do have challenge, but what I have noticed that at least in today's situation we have years we can go and represent, but uh, as has been said, that data always help in getting things proven. What we lack is data which we can actually and we are seeing. I also happen to be part of IBC, and we had been advocating at all front. It takes time. It's slow.
Yeah.
Then it becomes more frustrating. If you are patient and keep doing it, then it's possible, right? So if I have a fund life over 8 9 years, And if something takes, those many years, then it becomes really,
Difficult.
disheartening. I'll not say frustration is a different word, but disheartening because you already, lived life of one fund, you're in second fund. Right? So
Yeah.
things changes a lot. But I would add, couple of things. Why, tier two, tier three cities have become all of a sudden, interesting in India. It has,
Yeah, and
it,
your portfolio is a big reflection of that. So
we
yeah.
have almost around 65%. But I think what has really changed, Snigdha, is that, it's a function of infrastructure and access, to resources, right? Bangalore was easy, you have better connectivity, availability of human capital is in abundance, I'll say, right? Because that's where most of the software guys are there. And since it was, our industry is evolving more around, software, quite naturally, you will see most of the VCs there, right?
Yeah.
What changed last few years? I'll say it is a mix of both, need of the hour and also, some good work done by, some of the, government, sorry, ministries. Today, infrastructure is far better, right? I can easily reach any part of the country in 2 hours time, right? Which was not a possible, few years back. We had less number of airports. Now, at least I have access to, cities because of the, aviation policy India has developed, and more airports are coming. So,
Yeah.
access to places is there. If I can't travel, then how I do evaluate in first place, right? Second, COVID, while it, played its own havoc, but it changed the way people started working, right? Now there is an acceptance that I can work from home, and it doesn't
Yeah.
matter whether my home is in Timbuktu or my home is in Sri Lanka or I'm working out of Bangladesh. It's not an issue, right? Now, Nad is able to take a call while he's on road, right? So infrastructure has improved. And if you ask me the cost of running operation from tier 2, tier 3, is much lower compared to metros. Space availability is not an issue. All governments are very keen to see their, industrial activity or, business activity increases. So they are more supportive. They are willing to go extra mile compared to central government. And then, Nina rightly said that most of the people are not native of Bangalore or Mumbai. They are migrants, right? So people are comfortable at their hometown. They have their own comfort environment and access of capital is there, right? So a lot of things have changed over last few years, and especially digitization have taken place in India, right? Today we speak loud about all this quick commerce or e-commerce. This has happened because now everybody is banked, right? We have UPI system. I am able to, make transaction through mobile. If flow of money has rightly been said, it should be fungible. Money is easily able to flow within business in India, and that is the reason business are growing. If you look at the statistics for e-commerce, I think 65% business happening from all this tier two, tier three. Where is the metro contributing there? So wealth is fairly getting distributed, and I think India is going through interesting its own evolution. We'll
Yeah, I
keep
think
seeing.
I think it's interesting that I mean both Dinad also said that most of the talent that comes into the startup ecosystem is from tier two, tier three. I think the difference now is that with capital now moving to those markets, it's not necessary for people to sort of move to the metros. They can build in their own ecosystems, and you're seeing very vibrant ecosystems come
Yes.
up in Kochi, in Bhubaneswar. I think Orissa.
Oh,
I
Bhopal is
mean,
there, Indore is there.
exactly.
Look
Yeah,
at we can also classify.
But I don't think we should obsess about where the business is. Even in the US, Silicon Valley, Boston, Austin, this is where the action is.
yeah,
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 the clusters form because that's where the concentration of talent is. That's where the concentration of support services are. The formation happens in every industry. Automobiles in Detroit, yeah, movies in Hollywood, yeah, petroleum in Houston, yeah, high tech in Silicon Valley. Cluster formation happens. So I think, yeah, like I said before, yeah, infrastructure is improving. People can work from home. Companies are becoming a lot more virtual than they used to be, right? Yeah, yeah, and we have companies, where employees are spread all over US, even though headquarters is in Silicon Valley. Yeah, and that will happen in India too. You know, Zoom sessions, to have staff meetings, right? And so I think that's not going to be a big issue. Yeah. The big issue
Correct.
is only how do we make this whole thing flow a lot more freely,
Yeah.
make things happen a lot more easily, without government getting into your knitters all the time.
I'm going to move to the last segment. In just of time. We've just, I mean, both in the US as well as in India, we've just emerged from a fairly severe correction in the venture capital market. Lots of lessons have been learned. We have a lot of students in the audience today, many of who will go on to probably become entrepreneurs. What are some of the lessons that uh, we can share with them in terms of how they should approach starting up first and foremost and accessing capital?
You,
Um,
you want me to start?
yeah,
Yeah.
sure.
So by the way, as of 2 days ago, the world has changed.
Yeah.
Look at
Yeah.
Apple. Apple supply chain was all over the world. Apple was, now, stuff being produced in India and China is going to be subject to 34% or, and another, I don't know, the number for India is 27%, 26%.
Mm.
Yeah. So there's going to be a new world out there, if this thing sticks, what Donald Trump has done. But having said that, becoming an entrepreneur is a personal quest, is a personal journey, and it's a very lonely journey. Yeah, even though it's becoming more acceptable to become an entrepreneur, the Indian middle class ethos are still settle down, be responsible, do the right thing. That settled, there's a pressure. There's a pressure to, and what's it, out of 5-10 million people who come of age every year, 10,000 are becoming entrepreneurs. The number is very small, right? So it's a personal choice. It's a very tough journey. The 2, 3, 4, 5 years of doing getting a lot less, working a lot harder. And if you're going to do it to make money, it's not sustainable. You have to do it to prove something. In my case, when I became an entrepreneur back in 1982, my answer was, why can't I be an entrepreneur? But I am better than most of my co-workers, you know, technically and otherwise, and I had to go out and prove it, that I could become, and there were no role models, there were no examples, there was no encouragement, As a matter of fact, everybody discouraged me, including my wife. You settle, you're making good money, you have a nice job, so you have to have a fire from inside which overcomes all the objections, yeah, 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 your parents' objections, your peers' objections, and sustain that fire for 3-4 years. And of course, on the other end, when when you do emerge on the other end, it's a different story. But it's not a journey for the faint of heart.
No,
Yeah.
it's not. Definitely
Mm.
not. Ninad, I know you have to go, so why don't you take this?
Sure. I think firstly, all the young people in the audience who want to become startup founders, rule number one is ideas are fragile. If you have an idea, don't let it drop, it will break. Think over it, develop it into a good value business proposition and work on it. So if you have an idea, don't let it drop. It might be the most ridiculous idea. Your friend might say it may not work. Just keep pushing. Number two, startup journey is a journey of wealth. It is not a journey of income. If you're successful, you can make significant wealth. It's a journey of income is where you take a job and do all that. And as Mr. Rekhi said, you have to have the quest for it. It's a journey of wealth. And number three, I'm repeating it again, capital is chasing ideas. If you have a great idea, if you're able to present it well, and if you're able to show some proof of how you're going to execute it, people like me, Anil, and others are here to fund you. So it's capital is chasing ideas.
Great. Thank you. Sayan, what would you tell our students in the audience?
Just get started. Just get started as early as you can. Make as many mistakes as you can, but don't repeat those mistakes. That's it. And so many of those things you might be building, most probably would have been built in some part of the world. They might have already made those mistakes, created some of those flywheels. No harm in copying some of them and figuring out the difficult part and let's say optimizing them. That is also okay, but just get started and and you have time when you're in college. I'm assuming most of the attendees today are still in their college. You have time. You have the luxury of time. Utilize them. Start up as many times as you want. Go deep. Start solving some of the tough problems, and don't expect money upfront. It will not happen. You'll be wasting your time. I tried raising in Calcutta 2010 from the Marwaris and Gujaratis in Calcutta. Bengalis in Calcutta, as you know, mostly would not have capital. Could not convince them why they should invest in loss-making businesses, but tried doing that. So don't try raising day zero. Build something, show that it works. So some proof points. As investors, we are looking for some proof points to predict what is going to happen in the next 6-7 years, right? So show some proof points and then run behind the capital.
Great. Anil, you have the last word.
I don't have much to add, but I can say that no better time than this, especially in India. If somebody really want to get started, I don't think capital is an issue anymore. If you have something which has some potential, you will find that nature of capital, be it an angel investor or a small capital to get started, family friend, or even a lot of government schemes are there,
Yeah.
a lot of grants are available. So I think I resonate with that if you want to get started, get started. I think
Yeah.
India is currently a land of opportunity, so
Yeah. Yeah.
in spite of all challenges, but still one of the best time to get moving.
I think
You,
we
you,
have a.
you you just want
Sorry.
to tell the younger people, Bill Gates, Mike Zuckerberg, Michael Dell, yeah, Steve Jobs, yeah, they're all, son of college dropouts to do their stuff. Oh, and Larry Ellison too.
Yeah.
Yeah. So the age is no barrier. Age is no barrier. Being foolish, doing something foolish early
I
on,
agree.
is
we
learning
have
experience.
we have one founder who's 67-year-old, and we have one founder which probably in early
Oh yeah,
20s. So
I can list a lot of older founders too. Yeah, Ray Noda was 67 when he started
that's true.
his Nobel. Yeah. Colonel Sanders was
True.
68 when he
True.
started Kentucky Fried Chicken.
True.
Mm, Yeah.
Any
But
questions from the? Sorry. Did anyone else? I think we'll just open it up for questions from people who are watching. Any questions out there?
Good morning, everyone. So, sir, Mr. Karpe, we have received a question from you from the YouTube chat. So the question is, 100x VC is known for its founder-first approach and early-stage investments. What are the top three qualities that you look for in a startup before deciding to invest in such an early stage?
Dinard looks like you can't drop out.
Table. What are the abilities we see in the founder to execute? Number two is, the size of the market. We are not looking at tiny size markets. We are looking at markets which are big. And number three is how scalable it is because of any, moat which they have in the business. So these are the top three things we see.
Okay, sir. Thank you so much for such an insightful answer to the question. Sir, in India, we see a lot of VC money flowing into severely loss-making ventures. Do you think there is enough value at the end of it? This question was directed to Mr. Anil Joshi by YouTube chat.
See, by nature, VCs are known to fund losses because they get into at a development stage of either a business or product. So we'll keep investing in loss making. I think P's come in when business is stable and need a different kind of growth capital. So by nature, we'll keep investing in loss making venture as long as it has a potential.
Okay, sir. Thank you so much. Again, Mr. Rekhi, there's a question for you. What is the push that Indian companies and particularly startups need to reach in the neighborhood of Silicon Valley companies?
I'm sorry, one more time. What is the
So the question was, what is the push that Indian companies and particularly Indian startups need to be in the neighborhood of the Silicon Valley startups?
mm, every startup has to sort of tend to its local market, right? Unless the Indian startups are trying to sell into US, to be like Silicon Valley. In Silicon, the Silicon Valley is a very competitive environment. There's not an idea, not a thought that you have that somebody else doesn't have. So almost every time you think you have something unique, I can tell you 10 other guys who have same idea, similar idea. So the Indians should have to develop their own thinking, catering to their own market, and be like Silicon Valley it's very hard. Silicon Valley is an environment, which is very different. By the way, I've been in Silicon Valley since 1971. I was here when Intel was a startup. I was here before Apple started, and all that, right? So the this environment here is very focused on less focus on services, less focus on consumer, very focused on deep tech, and AI, now, and I've written everywhere: chips, systems, software, networking, social, local. I've been in, almost every, I was a pioneer myself in computer networking. When I did the computer networking company in 1982, we were the first one. And long before the internet happened. Internet didn't happen for another dozen years after Athlon was done in 1982. So I think you have to play to the local needs, local environment, local competition. It's very hard to be a company in India going after business in the US. Yeah.
Okay, sir. Thank you so
And,
much
there's,
for your
and
answer.
there's
Uh,
no need for that to either. India is a large enough market.
right, sir. Thank you. Uh, Sir, the next question is to Mr. Sayan Ghosh. Sir, as you have a unique method of co-building the companies you invest in, how do you devote and manage equal time for your investments? What is one company you are currently co-building and you're excited about?
I think that's the secret sauce. How do we go build? All my team members are ex-founders and operators. We don't literally, I'm the least experienced in the team, and I have the investing experience, and everyone else is ex-founders, built companies, sold companies. So they come from the perspective of how to build out companies. So that's what we do. Across our team, one of my co-founders is a two-time, he sold both of his companies in the enterprise side. The co-founder has I think nearly 2 decades of experience in the consumer side. So that's what they bring in, having been there, done that. And excited about each of the companies. I think most of our companies are profitable, and we are the only VC fund in this country where companies are profitable, even at an early stage, plus they're hyperscaling. So we have been able to figure out some of this ways to hyperscale profitably. One of the companies just closed their financials reached 180 crores. I think some 15 times growth in a year. So it's, I mean, all across the fund, we are seeing that 3, 4, 5x growth to 10, 15, 20x growth within a year. So I'm excited equally about each one of them.
Thank you, sir, for your answer. Sir, this brings an end to the Q&A session. Now, Pradyum will take over here.
We just have an announcement to make. So, greetings to one and all present here. I stand before you with immense pride and excitement to announce the upcoming launch of the second edition of our newsletter on Visage. This publication is a testament to the vibrant entrepreneurial spirit fostered by the Entrepreneurship Development Cell and Incubation Center of St. Xavier's College, Autonomous, Kolkata. And On Visage is just more than just a newsletter. It is a window into the world of innovation and enterprise that we are cultivating within our institution. The name itself embodies our vision to foresee and shape the future of entrepreneurship. Through its pages, we celebrate the creativity, collaboration, and resilience that define the entrepreneurial journey. In today's rapidly evolving business landscape, entrepreneurship has become more than just starting a business and going about asking for funds. As we saw in the VC panel today, it's just about identifying real world problems and crafting innovative solutions. Onvisa serves as a crucial platform in this endeavor. It bridges the gap between budding entrepreneurs and industry leaders, providing invaluable insights, knowledge, and opportunities. One of the core purposes of OnVisage is to provide a stage for our cell members, a platform where their ideas can shine and their efforts can be celebrated. Through this newsletter, we aim to promote their work, inspiring others to join us in the fostering innovation and entrepreneurship. Let me give you a glimpse of what awaits in this exciting session and edition. The newsletter explores broad themes central to entrepreneurship and innovation, offering insights into emerging trends, impactful workshops, the milestones achieved by our cell, and it is a celebration of creativity, collaboration, and the entrepreneurial spirit that drives us forward. I'm thrilled to share that very soon you'll be able to access OnVisage on EDCIC's social media handles and website. We encourage you to explore it digitally and share it widely to maximize its impact. Thank you all for your attention and support. Have a great day. We'll now be having the vote of thanks.
As we conclude this insightful venture capital panel discussion, we are confident that the invaluable perspectives shared today will serve as a guiding light for our attendees in their entrepreneurial journeys. Our distinguished panelists, Mr. Anil Joshi, Mr. Kanwal Rekhi, Mr. Sayan Ghosh, and Mr. Ninad Karpe have truly embodied the spirit of entrepreneurship, providing deep insights into transforming ideas into thriving ventures while navigating the complexities of the business world. Under the expert moderation of Ms. Snigdha Sengupta, this session has not only inspired but also offered strategic direction to the aspiring entrepreneurs. On behalf of the Entrepreneurship Development Cell and Incubation Center of St. Xavier's College, Autonomous, Kolkata, we extend our heartfelt gratitude to esteemed speakers for their time, knowledge, and invaluable contributions to this discussion. We would also like to express our sincere appreciation to our respected principal, Reverend Dr. Dominic Savio, S.J., and Vice Principals, Reverend Dr. Joseph Kolandai, S.J., Reverend Dr. Peter Arokyam, S.J., and Professor Bertram da Silva for their constant encouragement, which inspires us to strive for excellence and uphold the esteemed Zavarian tradition. Our gratitude extends to our faculty advisor, Dr. Arup Kumar Mitra, for his unwavering support and guidance at every stage. We are also deeply grateful to attendees for their active participation, patience, and for posing such insightful questions. Lastly, a special thanks to the members of the Entrepreneurship Development Cell and Incubation Center for their dedication, impeccable coordination, and commitment in making this event a success. The credit form will now be rolled out in the YouTube live chat. Attendees are requested to fill it immediately. Once again, thank you for joining us today and have a pleasant day.
Thank you. Thank you.
Thank you. Thank you for having us. Very well.